LG Electronics. This one, of course, has been around since the 1950s. It's the world's second largest television manufacturer, a huge player in these flat screen LED and plasma screen televisions. It, however, also has a business which manufactures mobile phones. It's huge in air conditioners, and it has an enormous presence in all of the conventional domestic appliances, be those fridges, washing machines, dishwashers, and the likes. Even tumble dryers, yes. Now, this one is listed in Korea, okay? So that means when you look at it, you've got to look at the share price, which is quoted in Korean won. It also has a secondary listing in London. But if you do the conversion from Korean won into US dollars, which you know we like to do, this one brings you out with a market cap of $65 billion. So let's put that in perspective. We know that Apple has a market cap close to $700 billion. That's 10 times larger. But $65 billion is not an insubstantial amount. That makes it roughly the equivalent of one of South Africa's very large companies, say equivalent to sort of MTN, a little bit smaller than SAB, Miller, a little bit smaller, about Naspers' size. That's another one which would be in the same kind of ballpark. Price to earnings ratio 22.8, dividend yield of 0.92. Let's look at the share chart of LG Electronics. So what you can see there is over 5 years going down. What I can tell you is that if you look back over a longer period, you will see that at one point in 2007, 2008, it was trading at 150,000 won. There you can see it trading at 44,000. So it's been rough sledding for these guys. Very competitive, as I said before. The market's softened up a little bit. Certainly, they've not battled in terms of sales, but what they've battled with is margin. So I think that creates an interesting entry point. I would not be going chasing a stock of this nature. Yes, it's true they'll probably continue to do well. Yes, it's true that their management team are very dynamic. But overall, profits at the end of the day are everything. There's another reason why I don't like the Korean Kaibols, and that is that they are part of family-owned construction companies and companies that have multiple subsidiaries. So LG Electronics is owned and controlled by the LG Group, which is also listed. And there are all sorts of complicated financial interrelationships between the entities, often loans that are advanced from the parent company to the operating subsidiary, as well as transfer pricing issues between them and other subsidiaries. So you never know when you buy LG Electronics whether they're actually going to make all the money in this entity, whereas they're going to siphon profits off into another entity, or whether they're carrying debts which they decide in this given year to repatriate, or monies to move from one subsidiary to the other. So as much as you might like the brand, and as much as you might think that everybody in the universe is going to be upgrading their television in the next couple of years, I would say LG, like Samsung, is one to avoid. So it would be not hot in my book.